Question 1. Under the Alaska insurance regulations, what is the purpose of the free look clause in term life insurance policies? A. To guarantee coverage even if premiums are not paid on time. B. To allow the policyholder to return the policy for a full refund within a specified period. C. To allow the policyholder to borrow against the policy's cash value. D. To ensure that the insurer provides a minimum death benefit regardless of changes in policy value. Answer B. Explanation. The free look clause allows the policyholder a specific period, usually 10 days in Alaska, to review the policy after its delivery. During this period, they can return the policy for any reason and receive a full refund of premiums paid. This rule ensures consumer protection by allowing policyholders to reconsider their purchase after reviewing all policy terms and conditions. Options A, C, and D refer to other aspects of life insurance policies such as grace periods, policy loans, not applicable to term life, and minimum benefit guarantees, which are unrelated to the free look provision. Question 2, scenario-based. Mr. Patterson has a term life insurance policy in Alaska with a death benefit of $200,000 and his wife named as the primary beneficiary. He recently made an absolute assignment of the policy to his business partner to secure a business loan. Unfortunately, Mr. Patterson passes away while the loan is still outstanding. Who will receive the death benefit? A. The business partner as the new policyholder. B. Mr. Patterson's wife as the original beneficiary. C. The death benefit will be split equally between the wife and the business partner. D. The death benefit will be held by the insurer until the loan is paid off. Answer A. Explanation. An absolute assignment transfers all rights and ownership of the policy to the assignee, who, in this case, Mr. Patterson's business partner. Since Mr. Patterson made an absolute assignment to secure a loan, the business partner becomes the new owner and beneficiary of the policy. Therefore, the business partner will receive the full death benefit to satisfy the loan obligation. Option B is incorrect because the assignment overrides the original beneficiary designation. Option C is incorrect because the benefit does not split unless specified, and D is incorrect because the insurer pays the benefit to the rightful owner. Question 3. In Alaska, which of the following would not be considered an unfair trade practice by an insurance producer under Alaska statutes? A. Offering a prospective client a portion of their premium back in exchange for purchasing a policy. B. Misrepresenting the terms of a policy to make it appear more favorable than it is. C. Comparing two policies honestly and accurately to help a client make an informed decision. D. Twisting, which involves persuading a client to replace an existing policy with a new one based on misleading comparisons. Answer C. Explanation. Option C refers to a legal and ethical practice, providing honest and accurate comparisons to help a client make an informed decision which aligns with fiduciary responsibilities and suitability requirements. Option A refers to rebating, which is illegal in Alaska. Option B describes misrepresentation, another illegal activity. Option D refers to twisting, which is prohibited because it involves misleading a client into replacing a policy for the producer's benefit. Question 4. In Alaska, what is the main advantage of having a waiver of premium rider on a term life insurance policy? A. Increases the death benefit in case of accidental death. B. It allows the policyholder to stop paying premiums if they become disabled. C. It provides a cash payout if the insured is diagnosed with a terminal illness. D. It allows the policyholder to borrow against the policy's cash value. Answer B. Explanation. The waiver of premium rider ensures that if the policyholder becomes disabled, their premium payments are waived and the policy remains in force without the need for further payments. This is an important feature for policyholders who are concerned about the financial impact of a disability. Option A describes the function of an accidental death rider. Option C refers to an accelerated death benefit rider, while option D involves policy loans, which are not available in term life policies. Question 5, scenario-based. Ms. Caroline has a term life insurance policy with a $500,000 death benefit. She mistakenly provided an incorrect birth year on her application, making her appear younger than she is. Ms. Caroline passes away and the insurer discovers the heir. What will happen to the death benefit? A. The insurer will pay the full $500,000 to the beneficiary. B. The death benefit will be denied due to the misstatement of age. C. The death benefit will be reduced to reflect the correct age and premiums paid. D. The policy will be rescinded and premiums refunded to the estate. Answer C. Explanation. In Alaska, the misstatement of age clause allows the insurer to adjust the death benefit if the insured's age was misstated on the application. In this case, the death benefit will be recalculated to reflect what the premium would have purchased based on Ms. Caroline's actual age at the time of policy issuance. Option A is incorrect because no full payment is made after an age misstatement. Option B is incorrect because the policy is not denied due to a misstatement of age. Option D is incorrect, as the policy is not rescinded. Question 6. Which of the following would not be considered a valid use for a term life insurance policy in Alaska? A. Providing income replacement for a family's main earner during their working years. B. Covering a business loan for a key person in a small company. C. Funding retirement income through cash value accumulation. D. Funding a buy-sell agreement between business partners. Answer C. Explanation. Term life insurance does not accumulate cash value and therefore cannot be used to fund retirement income. Options A, B, and D describe common uses of term life insurance, including income replacement and business-related coverage like key person insurance and buy-sell agreements. Option C is incorrect because cash value accumulation is a feature of permanent life insurance policies such as whole life or universal life. Question 7. What happens if a term life insurance policy lapses due to non-payment of premiums, but the policyholder wants to reinstate it within the allowable reinstatement period? A. The policyholder must repay the missed premiums plus interest and provide proof of insurability. B. The policyholder will need to apply for a new policy as the old one cannot be reinstated. C. The insurer will automatically reinstate the policy without any conditions if requested within the period. D. The insurer will reduce the death benefit to reflect the missed premiums and then reinstate the policy. Answer A. Explanation. In Alaska, if a term life policy lapses due to non-payment of premiums, the policyholder can generally reinstate it within a specified period, typically up to 3 years, by repaying the missed premiums with interest and providing proof of insurability. Option B is incorrect because reinstatement is possible within the allowable period. Option C is incorrect because reinstatement requires meeting conditions like proving insurability. Option D is incorrect because the death benefit is not reduced. The full death benefit is restored once the policy is reinstated. Question 8, scenario-based. Mr. Lawrence purchases a 20-year term life insurance policy with a conversion option. After 15 years, he decides to convert the policy to whole life insurance. Which of the following is most likely true about the conversion process? A. Mr. Lawrence will need to provide new proof of insurability. B. The new policy will be issued based on his current age at the time of conversion. C. The conversion will allow Mr. Lawrence to continue paying the same premium amount. D. Mr. Lawrence will be able to extend the coverage term for an additional 20 years. Answer B. Explanation. Most term life policies with a conversion option allow the policyholder to convert the policy to a permanent one, e.g. whole life, without providing additional proof of insurability. However, the new policy is typically based on the insured's current age at the time of conversion. Option A is incorrect because no new proof of insurability is required. Option C is incorrect as the premium will likely increase based on the new policy type and the insured's age. Option D is incorrect because conversion does not extend the term of coverage. It changes the policy type. Question 9. Which of the following is not a common feature of group term life insurance policies in Alaska? A. Conversion options allowing employees to convert to an individual policy upon leaving employment. B. Lower premiums due to risk being spread across the group. C. Accumulation of cash value over time. D. Coverage provided under a master policy with certificates issued to individuals. Answer C. Explanation. Group term life insurance policies do not accumulate cash value. This is a feature of permanent life insurance policies like whole life or universal life. Options A, B, and D describe common features of group term life insurance. Conversion options, low premiums due to group risk and coverage provided under a master policy. Option C is incorrect because term policies, including group term, do not have cash value. Question 10. Under Alaska law, which of the following actions would be classified as a twisting in the sale of term life insurance? A. Offering a discount on the first premium payment. B. Persuading a client to replace an existing policy with a new one based on false or misleading comparisons. C. Misstating the client's health condition to lower premium costs. D. Encouraging a client to purchase additional coverage they may not need. Answer B. Explanation. Twisting involves persuading a client to replace an existing policy with a new one based on false, misleading, or incomplete information. This is an unethical and illegal practice under Alaska insurance law. Option A refers to rebating, which is also illegal but distinct from twisting. Option C refers to misrepresentation, another illegal act but unrelated to policy replacement. Option D is not twisting, and while it may be an inappropriate sales practice, it doesn't involve policy replacement through misleading information. Question 11. In Alaska, if an insured individual with a term life policy dies within the grace period for an unpaid premium, what typically happens to the death benefit? A. The full death benefit is paid out and no further action is required. B. The death benefit is reduced by the amount of the unpaid premium. C. The policy is considered lapsed and no death benefit is paid. D. Only a partial death benefit is paid based on how long the premiums were paid. Answer B. Explanation. In Alaska, if the insured dies during the grace period, usually 3031 days, for an unpaid premium, the insurer typically pays out the full death benefit, but the unpaid premium is deducted from the payout. The grace period ensures coverage remains in force, but any unpaid premiums are recovered by the insurer from the death benefit. Question 12. Which of the following is true about the incontestability clause in Alaska's life insurance policies? A. It allows the insurer to deny a claim at any time due to material misrepresentation. B. It prevents the insurer from denying claims after the policy has been in force for 2 years except for fraud. C. It allows the insured to contest the amount of premiums paid. D. It applies only to policies with cash value accumulation. Answer B. Explanation. The incontestability clause in Alaska's life insurance policies generally states that after a policy has been in force for 2 years, the insurer cannot deny a claim based on misstatements made in the application except in cases of fraud. Option A is incorrect, as the clause limits denial of claims after 2 years. Option C is unrelated, and option D is incorrect, as the incontestability clause applies to all life insurance policies, not just those with cash value. Question 13. In Alaska, a life insurance policy that includes an accelerated death benefit rider allows A. the policyholder to take out loans against the policy's cash value, B. early access to a portion of the death benefit if the insured is diagnosed with a terminal illness, C. additional death benefits in the case of accidental death, D. the beneficiary to receive double the payout if the insured dies within the first year of the policy. Answer B. Explanation. The accelerated death benefit rider in Alaska allows policyholders to receive a portion of the policy's death benefit early if they are diagnosed with a terminal illness. The remaining death benefit is paid to the beneficiaries upon the insured's death. Option A refers to policy loans which do not relate to this rider. Option C describes an accidental death rider. Option D is unrelated to this rider. Question 14. If an individual purchases a renewable term life insurance policy in Alaska, what happens at the end of the initial term? A. The policy ends and no further coverage is available. B. The policy automatically converts to a permanent life policy. C. The policyholder can renew the policy for another term without providing new proof of insurability. D. The premium remains the same for the next term. Answer C. Explanation. With a renewable term life insurance policy in Alaska, the policyholder can renew the policy for another term without needing to provide new proof of insurability, though the premium will increase based on the insured's current age. Option A is incorrect because renewable policies allow for continuation. Option B describes conversion, not renewal. Option D is incorrect because premiums typically increase with age. Question 15, scenario-based. Mr. Hughes, an Alaska resident, purchased a 10-year term life insurance policy 5 years ago. He now wishes to surrender the policy. What will he most likely receive from the insurer? A. A portion of the premiums he paid over the past 5 years. B. The full death benefit. C. Nothing, as term life policies do not offer surrender value. D. A prorated amount based on the time left in the policy. Answer C. Explanation. In Alaska, term life insurance policies do not accumulate cash value and do not have a surrender value. If Mr. Hughes surrenders the policy, he will receive no payout, as term policies are pure death benefit protection. Option A is incorrect because no premiums are refunded upon surrender. Option B is incorrect because death benefits are paid only upon the insured's death. Option D is incorrect as no prorated amounts are provided with term policies. Question 16. In Alaska, if a term life policyholder includes a guaranteed insurability rider, what does this allow? A. The policyholder can increase the policy's death benefit without undergoing a new medical exam. B. The premiums will never increase, regardless of the insured's age. C. The policyholder can borrow against the policy's cash value. D. The death benefit doubles if the insured dies in an accident. Answer A. Explanation. The guaranteed insurability rider allows the policyholder to increase the policy's death benefit at specified times, e.g., policy anniversaries or life events like marriage, without having to provide evidence of insurability or undergo a medical exam. Option B is incorrect, as premiums typically increase with age. Option C refers to cash value loans, which are not applicable to term policies. Option D describes an accidental death benefit rider. Question 17. What is the maximum length of the free look period for life insurance policies in Alaska? A. 10 days, B. 15 days, C. 20 days, D. 30 days. Answer D. Explanation. Alaska mandates a maximum free look period of 30 days, during which a policyholder can review their life insurance policy and return it for a full refund of premiums paid if they are not satisfied. This period allows policyholders to reconsider their decision without any financial penalty. Question 18. If an Alaska life insurance policy is considered lapsed due to non-payment of premiums, what option does the policyholder generally have within a certain time frame? A. They must purchase a new policy. B. They can reinstate the policy by paying back premiums and interest. C. The policy automatically renews after 6 months. D. The policy is permanently terminated without any option for reinstatement. Answer B. Explanation. In Alaska, most life insurance policies provide a reinstatement period, typically 3 to 5 years, during which a lapsed policy can be reinstated if the policyholder pays back the unpaid premiums with interest and provides proof of insurability. Option A is incorrect because the policy can be reinstated. Option C is incorrect, as policies do not automatically renew after a lapse. Option D is incorrect, as there is an option for reinstatement within the allowed period. Question 19. Which of the following best describes the purpose of a term life insurance policy in Alaska? A. Accumulating wealth over time through cash value buildup. B. Providing a death benefit for a specific period at an affordable premium. C. Offering lifelong coverage with premium payments that never increase. D. Covering funeral and final expenses only. Answer B. Explanation. The primary purpose of a term life insurance policy is to provide death benefit coverage for a specified period, e.g. 10, 20, or 30 years at an affordable premium. Option A describes a feature of permanent life insurance policies which build cash value over time. Option C also relates to permanent policies, and option D refers to final expense insurance, which is a type of permanent coverage. Question 20. Scenario-based. Mrs. Larson, an Alaska resident, has a term life policy with an optional return of premium rider. If she outlives the policy's term, what will happen? A. She will receive the full amount of premiums she paid over the life of the policy. B. The policy will renew automatically for another term at no extra cost. C. She will receive a prorated refund of the premiums she paid. D. No premiums will be returned and the policy will expire. Answer A. Explanation. A return of premium rider refunds the policyholder the full amount of premiums paid if they outlive the policy's term. While this rider increases the cost of the policy, it can provide peace of mind knowing that the premiums paid are returned. Option B is incorrect, as the policy does not renew automatically. Option C is incorrect because the entire premium amount is refunded, not a prorated amount. Option D is incorrect for policies with this specific rider. Question 21. Which of the following is true regarding group life insurance policies in Alaska? A. Premiums for group life insurance are generally higher than individual policies. B. Coverage under group life insurance ends when the employee leaves the company. C. Group life insurance policies in Alaska do not allow any conversion options. D. Beneficiaries of group life insurance policies must be the employee's immediate family. Answer B. Explanation. In Alaska, coverage under a group life insurance policy typically ends when the employee leaves the company unless the policy includes a conversion option allowing the employee to convert the group coverage to an individual policy. Option A is incorrect as group premiums are usually lower. Option C is incorrect because most group policies offer conversion options. Option D is incorrect because beneficiaries can be anyone the employee designates. Question 22. If an Alaska resident is covered under a whole life insurance policy, which of the following benefits is typically available? A. The policyholder can increase the death benefit without a medical exam. B. The policy builds cash value over time that the policyholder can borrow against. C. The death benefit decreases as the insured gets older. D. The premiums decrease as the policyholder ages. Answer B. Explanation. Whole life insurance policies build cash value over time, which the policyholder can borrow against. This is one of the key features that differentiate whole life from term life insurance. Option A refers to a guaranteed insurability rider, which may not be standard in all policies. Option C is incorrect because whole life insurance maintains a level death benefit. Option D is incorrect as premiums for whole life policies typically remain level throughout the policy's duration. Question 23. In Alaska, if a life insurance policy includes a waiver of premium rider, what does this mean? A. The policyholder is required to pay only half the premium if they are disabled. B. Premiums are waived if the policyholder becomes totally disabled. C. The policyholder must pay back premiums once the disability ends. D. Premiums are only waived if the policyholder is hospitalized for more than 30 days. Answer B. Explanation. The waiver of premium rider allows the policyholder to stop paying premiums if they become totally disabled and are unable to work. This rider typically continues the policy without lapse, even if the policyholder is not paying premiums during the period of disability. Option A is incorrect as the full premium is waived. Option C is incorrect as the policyholder does not need to pay back premiums once the disability ends. Option D is too restrictive and does not accurately describe the rider's conditions. Question 24. What is the main purpose of a life settlement transaction in Alaska? A. To purchase additional life insurance at a discounted rate. B. To convert a life insurance policy into long-term care coverage. C. To sell an existing life insurance policy for a lump sum of cash. D. To change the beneficiary designation on the policy. Answer C. Explanation. A life settlement allows a policyholder to sell their life insurance policy to a third party for a lump sum of cash. The buyer becomes the policy's new owner and beneficiary and is responsible for continuing premium payments. The payout received by the original policyholder is generally less than the death benefit but more than the cash surrender value. Option A is unrelated to life settlements. Option B refers to conversion for long-term care benefits, which is a different type of transaction. Option D is unrelated to life settlements. Question 25, scenario-based. MS Johnson, an Alaska resident, has a whole life policy that she took out 15 years ago. She now wants to use some of the policy's accumulated cash value to pay for home repairs. What is the most likely way she can access these funds? A. She can only surrender the policy and forfeit the death benefit. B. She can take out a loan against the policy's cash value without surrendering the policy. C. She must cancel the policy and receive the full death benefit early. D. She can only borrow up to half of the policy's death benefit. Answer B. Explanation. MS Johnson can take out a loan against the cash value of her whole life policy. This allows her to access funds without surrendering the policy or cancelling the death benefit. Option A is incorrect because loans allow access to funds without surrendering the policy. Option C is incorrect because life insurance policies do not pay out the death benefit early unless a specific rider allows it. Option D is incorrect as the amount that can be borrowed is based on the policy's accumulated cash value, not a percentage of the death benefit. Question 26. Which of the following is true about the conversion option in term life insurance policies in Alaska? A. The policyholder can convert their term policy to a permanent policy without undergoing a medical exam. B. Conversion requires the policyholder to provide new proof of insurability. C. The conversion option is available only during the first year of the term policy. D. The policyholder must pay additional premiums if they convert the policy. Answer A. Explanation. The conversion option allows the policyholder to convert their term life insurance policy into a permanent life policy such as whole or universal life without undergoing a new medical exam or providing proof of insurability. Option B is incorrect because no new proof of insurability is required. Option C is incorrect as the conversion option is generally available throughout the term, though the time frame may vary. Option D is not true in all cases, though premiums for the new permanent policy may be higher. Question 27. In Alaska, life insurance policies that include an accidental death benefit rider will A. Double the death benefit if the insured dies from natural causes. B. Increase the death benefit if the insured dies due to an accident. C. Provide an additional payout if the insured dies while traveling. D. Pay the death benefit early if the insured becomes terminally ill. Answer B. Explanation. An accidental death benefit rider increases the death benefit payout if the insured dies as the result of an accident. This rider typically provides an additional amount on top of the base death benefit. Option A is incorrect, as the rider applies only to accidental death, not natural causes. Option C is unrelated, as the rider applies broadly to accidents, not just while traveling. Option D refers to an accelerated death benefit rider, not an accidental death rider. Question 20. Which of the following life insurance policy options allows an insured in Alaska to stop paying premiums after a certain amount of time, but the policy remains active? A. Modified premium. B. Paid up life insurance. C. Level premium. D. Single premium. Answer B. Explanation. Paid up life insurance allows the policyholder to stop paying premiums after a set period, and the policy remains in force. This option is typically used in whole life policies when enough premiums have been paid to cover the cost of the policy for the rest of the insured's life. Option A refers to policies where premiums start low and increase. Option C describes policies with level premiums throughout the policy's term. Option D involves paying a single lump sum premium upfront. Question 29. In Alaska, if a life insurance policyholder wishes to ensure that their policy covers their mortgage payments if they die, which type of rider should they consider? A. Waiver of premium rider. B. Accelerated death benefit rider. C. Mortgage protection rider. D. Guaranteed insurability rider. Answer C. Explanation. A mortgage protection rider is designed to pay off the remaining balance of the policyholder's mortgage in the event of their death. This rider ensures that the insured's family will not be burdened with mortgage payments after the insured's death. Option A refers to waiving premiums due to disability. Option B allows early access to the death benefit for terminal illness. Option D allows for increases in the death benefit without a medical exam. Question 30, scenario-based. Mr. Larson, an Alaska resident, has a variable life insurance policy. Due to a stock market downturn, the investment portion of his policy has lost value. How will this affect his policy's death benefit? A. The death benefit remains the same regardless of investment performance. B. The death benefit will decrease because of the poor investment performance. C. The policy will automatically terminate if the investments do not recover. D. The policyholder must pay higher premiums to keep the death benefit the same. Answer B. Explanation. With a variable life insurance policy, the death benefit is linked to the performance of the investment portion of the policy. If the investments perform poorly, the death benefit may decrease. However, the policy will not automatically terminate due to poor performance, and additional premiums are not typically required unless specified.